Welcome to Dragonfly Trading. My name is Carrie. I'm a full-time trader and mentor for struggling traders in the crypto and Forex markets. Today's video, we're going to take a deep dive into Bitcoin. Now remember, everything you hear in this video is my bias. It is not financial advice in any way. So with that said, bear with me. It will be a little lengthy and hopefully we can learn something. So let's get started. So Bitcoin will be closing a yearly, a 9-month, a 6-month, a monthly, weekly candle close at the end of this month. And what type of candle Bitcoin closes is very important. So let's talk about the yearly first. The yearly candle, if it closes the way it is, which it's highly likely that it will be what is called a bearish engulfing. For those of you that do not know what a bearish engulfing candle is, it's when the candle takes out the previous candle's body. It totally engulfs it. And that is what is happening here. Now, yes, it is bearish, but remember, Bitcoin is an early asset. It's only about 10 years old. So there will be others along the way. But this is the first time that we're going to see it. But it probably will not be the last time. So as you can see, this yearly candle has bounced off the top of the wick of this bearish candle. If it does not hold, the next support is at 13,870. There's nothing much in between there on the yearly basis. So it's highly likely that that area does get tapped. Let's take a look at the 9-month candle. This candle I call an indecision candle. Some may call it something different, but it has equal wicks on both sides in between a small body. To me, that is an indecision candle. It's not a bad candle. It's not really a good candle. It's just an indecision candle. Again, the same area of support below is 13,870. If that is lost, the next support coming in is at 10,761. Let's take a look at the 6-month candle. If Bitcoin were to drop down to the low of 15,460, this would be a candle that would have an equal body with an equal wick above it. Again, it won't be the most bearish candle in the world, but it really will not be bullish either. Again, the next support is at 13,870, and underneath that is 10,761. The 3-month candle is the same exact candle, an indecision candle. Again, there's not much in between here and 13,870. If it loses that support, the next one's at 10,761. I didn't go any deeper than that because more than likely, one of those we will bounce from. Let's take a look at the monthly. The monthly candle, again, will be an indecision candle. Same exact supports. It is highly likely that one of these will get a bounce. So with that said, of all the candles, we have a yearly bearish engulfing, which would be the most important one because it's on a higher time frame. And then from there down, we have indecision. So does that mean bearish or bullish? I guess we would have to lean more towards the bearish. But my bias is that we are soon to come to a temporary bottom to get a bear market rally, or potentially even a bottom. And we're going to talk about that also. Okay, so we are on the history of Bitcoin, and we have a lot to talk about here. I haven't gone over the main count in a very long time, and I dug deep into it before this video. There is a lot of opinions out there, and mine is one of them. Am I correct? I can't say that I am, but I did my very best here in this analysis. One thing that we need to talk about, in Elliott Wave, there is only 2 areas in a 5-wave structure that can overlap. And that really tells us a lot about this entire move. When you get a 5-wave move to the upside, the only areas that can overlap is the areas that we call a nest, which is the areas of the 1s and 2s. They get lower degree as they rise. The highest degree is the main 1 and main 2. This area is allowed to overlap. It is allowed to come into each other. A lot of times, the 1s and 2s will find support on top of each other. You can't always see them, but it happens. The other area that is allowed to overlap is the areas of the 3s and the 4s. Remember, inside your 3rd wave, you also have a 5-wave move. The areas of the lower and higher degree wave 4s come into each other and often find support on one another. So they also are allowed to overlap in this area. These are the only 2 areas in a 5-wave move that are allowed to overlap. So with that in mind, we have to take into consideration, why is this area overlapping where it has never overlapped before? So with that being said, I have 2 ideas here. The first idea is on the chart in front of you. It is that this entire move to the upside was a wave 1. Now, some people may not see it that way, but this is the way that I'm presenting it. When you pull time from the low to the high of this wave 1, this correction for a wave 2 met minimum time requirement. This is very important. Pulling time for this is the only way that this time works. Then it moved to the upside in a lower degree wave 3. It pulled back from a 4, again pulling from the 2 to this 4. I'm sorry, from this 2 to this 4. It met perfect time. Then I see this big push to the upside as an overextended 5th, leading into a primary wave 3, and that the reason we're getting this overlap is because we're overlapping 4s. That this 4 is a lower degree 4 than this 4. And then Bitcoin will push up for a wave 5. Now, if this count is correct, we're minimum looking at July of 23 to meet time for this wave 4. Now, there shouldn't be any reason that it would break the bottom of its primary, of its lower degree wave 4. They often, and almost always 90% of the time, will either find support above or on its lower degree wave 4. So with that being said, I don't see any reason that it would break this major support that we have in here. Okay, so this is an idea, and I have another to present. Okay, so when we go on linear scale, it makes a very huge difference. On linear scale, this bull run to the upside, I want to naturally call it a wave 1. This drop to the downside, I naturally want to call a wave 2. In between, we have a lower degree wave 1 and 2, 3, 4, and 5 for a wave 3. Then the higher degree wave 4 came down and found support in its lower degree 4. Perfect. And then it pushed up for a wave 5. This is a very simple analysis, no breaking down the waves in between. But with this being said, on linear scale, this is highly suggesting that we have a complete wave 1. and that this correction that we're getting to the downside is putting in a wave 2. Now, with this being said, we have to consider time. We are looking at minimum of August of 24. So the Elliotticians out there that believe that all of this is a wave 1 and we're coming down for a 2, we have to consider time. This is the minimum time requirement, and I'm giving it the benefit of the doubt and giving it the less amount of time. So to say that this is a 1 and this is a 2, and this is soon to come to an end and we're going to go back on a bull run, we're not considering time, and it's very important. Now, could I be wrong? Absolutely. I could be wrong. I'm just a person. So with that said, could we find bottom and take off on a bull run? Absolutely. I'm just presenting what I see in the charts. Okay, so with all that being said, let's talk about the correction that we have happening in Bitcoin. Let's talk about the bull and the bear. The bull is that we want this wave to continue and to rally to the upside. If it does rally to the upside, I see it as coming from back here and creating an X or a B wave. It could get up to 40,000, but it could stop way before that. But best scenario is that it does rally to 40,000. If it does, at that point, this yellow WXY will get a partner leg to the downside. At this point, it will be up to the market. Will it go on a bull run or will it continue with this correction? We won't know until we get there. The bear scenario is that we're not going to get a rally and that this is going to continue downwards, finishing off this Z leg. At this point, wherever it finds its bottom, the market has a chance to continue its bull run. If it creates a bear market rally, and I have been over how bear markets happen very, very often, but if it rallies in a corrective move, then this entire structure will get a partner leg. Now, the higher it rallies, the better, because it will need an equal partner leg. The diagonal that I have talked about is still on the table. As long as we do not break over this wave 4 sitting at approximately 18,300 and come down to the downside in a 3-wave move and complete this diagonal, it's very possible that it could end off in an AB ending diagonal C for a Y wave, and then bear market rally or continue on a bull run. Breaking underneath 13,370 will invalidate this diagonal. And the reason why is because wave 3 cannot be the shortest wave. So if wave 5 comes underneath 13,370, it will invalidate it. All right, so let's talk about the bullish option first and how we want this leg to continue to the upside. You can count this fractal back here several different ways, so it's not that important what was behind us. What's important is what is going to happen here and how the market can climb higher. I see this current move as a corrective move. There is a chance that it can give this leg a partner leg to the upside, get above this resistance, pull back, flip it to support, and then give it another partner leg. It would give this entire leg a partner leg. And that's how it could get up to 40,000 correctively. Now, yes, it can totally stop here, not give the connector and just head downwards. Coming underneath 16,273, probability will shift to the bears greatly, and that price will be heading down for that potential Z wave. Let's talk about the bear option. The bear option is that price will be unable to get over 17,550, approximately this 618 retracement. If it bonks its head and makes a simple zigzag here, then it will head down for that potential Z wave. It's pretty much that simple. All right, so we're on the lower time frame, and let's talk about what Bitcoin needs to do to be bullish and to make that leg to the upside that we want to see. It needs to give this leg a partner leg. It needs to not come under 16,273. That will shift probability to the bears. It needs to use this 5-wave move and push to the upside in a bigger 5-wave move, giving this leg a partner. We need to take out the 618 at 17,548. We need to take out the 618 at 18,967. Taking both of those out is going to shift probability to the bulls. Then if it can pull back and flip this high resistance to support, then it can give this entire leg a partner to the upside and even go higher. But first thing on the list is we don't want to see a zigzag here that bonks its head on this 618 and then turns to the downside. We want to see a big C wave here and get above this 618. Okay, last on the list is the bear scenario on the low time frame, and that is basically that it's going to use this 5-wave move, give it a partner, it will turn in just a zigzag, bonk its head on the 618, and then head to the downside, going deeply for that Z wave. So I hope you enjoyed this video. Let me know in the comments, and I will see you in the next one.